welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, alongside Justin Frederick and Ryan Gerdes down at the end. Today is President's Day. Real quick, favorite president and why?
Oh, wow. You're just firing that one off.
Yeah, whoa.
Just thought of it. It's President's Day.
You know,
would you vote for me?
No.
That's awesome.
Don't give it any thought.
You know what? I liked Bush Sr. I think that my first awareness of politics, was right there during his presidency, and there was Operation Desert Storm, how all that went down, and I think that brought a lot of camaraderie together with that. Just from our neighborhood to what I was seeing in the news. I mean, obviously, I was looking through everything through the prism of a 7-year-old or 9-year-old, however old I was, a young boy, right? And I just felt like things were not as much mudslinging, not as much, BS in the political world, but I could be totally wrong. I just remember thinking, oh, that's a good president.
Yeah.
George Washington. George Washington. What a badass of all badasses. I mean, fought for the country, fought for our freedom, didn't want to be president, just didn't have a choice.
Good answer.
What an incredible man, helping to create just this monster of a company. Wow.
Country.
Country. Just unbelievable, man. I wish I could have met him and, to see everything that he's done for us is pretty cool.
Did you go to his plantation when
I
you were in
did.
D.C. last?
Oh, yeah.
That was
That's
crazy,
Mount Vernon. That place is
Yeah.
awesome. Mine's the same as Washington, because I keep thinking about George Washington's attitude and approach. One, you're right. He did not want to be president, but he honestly understood that if I'm going to serve this country, I'm going to actually serve this country. Went in and served. Serving the country wasn't a hey, this is now I'm going to become wealthy, I'm going to have all this power. And I keep thinking, boy, if today's politicians just had that same attitude, this country would be far better off.
I agree.
All right, well, you're going to want to text the word long to 623-AZ-RECON. That's long to 623-AZ-RECON. We're going to talk about the shifting market and where we're looking at investing opportunities and what we're advising our clients for. But I want to just talk about rates first, Justin, because a lot of people keep hearing the term mortgage-backed securities. Explain that to us like we're five, and how that relates to us investing in real estate or purchasing real estate.
So mortgage-backed securities is what, interest rates work off of long-term bonds or securities. So the way I like to put it to people is when more investing comes into mortgage-backed securities actually increase, which decreases mortgage rates. It allows Fannie and Freddie to give better interest rates on long-term investments. And so let's go back to COVID. So COVID, we had what was called the quantitative ease. And so the feds pumped money into mortgage-backed securities. It was like $550 billion. And it pushed rates significantly lower, artificially pushed rates significantly lower to stimulate the economy through a time when, there wasn't a lot of work happening. People couldn't do anything. Businesses couldn't operate. So we were trying to put more money back into people's pockets so they could refinance, which was awesome. It created a lot of opportunities in the market to purchase homes or even to refinance and save money or turn those into investments. But what happened was Trump here is now trying to do the same thing, going around the feds to make things more affordable. But his whole goal here is to keep rates. He wants the rates to go into fives and keep them in the fives to make things more affordable. So he didn't say what rate in the fives, but this is important. This is a good deal. We're talking last year at this time, rates were much higher. to
high,
buy.
high sixes, low sevens, right? In some
Yeah, low
cases.
sevens at
Yeah.
this point last year, and so the difference of that rate is massive. When we're talking about what's the average sale price right now in Arizona, what was it, 500 and something?
I don't know offhand. Thank you
Yeah,
for putting me
but
on the spot.
yeah, I mean, you put me on the spot, so. But
Asking you who your favorite president was? Then?
it wasn't a hard one for me. But this is a big deal. This is a big money saving move that, obviously Powell didn't like it so much, and he's trying to counteract it. Also, the tariffs in UK kind of played a role in that, and the yields in Japan. But I think those are short-term knee-jerk reactions to those, and we should see more positivity coming in the rates with Fannie and Freddie continuing to pump money into those mortgage-backed securities. So I'm excited about this, and I think it's going to play a role in the year. I think we've already seen an effect of it.
So I'm not going to act like I know everything about it, but from what I recollect, when we were dumping all that money into mortgage-backed securities during COVID, we were simply just printing the money and then putting it into mortgage-backed securities, and so that's what in turn created a lot of inflation as well, and then kind of rubber banding it back over into the sevens is. From a number of sources, I don't remember exactly what I was reading. Go ahead.
Well, a lot of the printed money came in the form of the PPPs to help out the businesses. So that was where a lot of the government issued a lot of forgiveness to companies. I had a guy that I was working with when he was buying a house right at the beginning of COVID. He ended up getting a PPP for $600,000. So not only did it support his business, but that was a lot of money printed just on his behalf. But there was a lot of that PPP money that went out there. The feds were taking their own funds and pumping it into mortgage-backed securities.
I know, but they could do that because they were printing money over here.
Oh, yeah, they printed all kinds of money.
At the end of the day, they were printing a lot of money.
Yeah, and
to cover the spread.
And then the stimulus packages that went out. There was a lot.
So I mean, tell me, because like I said, I haven't read too far into it. Is part of the plan to print money to put this $200 billion into mortgage-backed securities for this quantitative ease?
No. So the representatives that Trump was talking about was representatives of Fannie and Freddie. So during 2008 or 2009. The government took over Fannie and Freddie to keep the market from crashing because we had to be able to loan money through conventional financing. And so during, I believe it was 2019 when the government gave back Fannie and Freddie to be privatized again. But based on that, Trump's like, hey, you guys have raised billions now through mortgages. You guys got to give back money. Mm-hmm. And that's why he ordered them to start putting money into mortgage-backed security. So it was like, hey, we helped you. You're doing very well. Yeah. Let's take your funds. This isn't going to hurt you. You'll be able to write mortgages and do just fine. Just pump this money in there. Let's work on affordability for consumers. Help our country. This will help you in turn.
Mm-hmm. All right. Well, we're going to get into kind of the concept of, not the concept, but investing and what we're investing in, where we're seeing things going. And we want to invite you to have that conversation with us. All you got to do is text the word LONG to 623-AZ-RECON. That's LONG to 623-AZ-RECON. Ryan, as you know, and I don't know how often we say it on the show, but we have a saying on our team that money never disappears, it just moves. Meaning it doesn't matter what's going on in the market. It doesn't necessarily matter what's going on in the country or what's going on globally. There is always opportunity to invest and always opportunity to make money. It's just one point it'll be invest in this. Another time it'll be invest in this. In case in point, years and years ago, for our investors and ourselves, we were focused a lot on long-term rentals, buy and holds. Then we did. We got excited about Airbnbs and short-term rentals, and that became a thing. And then when the market became
we did great with them.
and we did great with them, and then the market became saturated, and then we moved into midterm rentals, which was
We're doing great with that.
we're doing great with that. And over the last 12 months or so, we've been really focused on short sales and flips. But it's your content, and we still are. And I think that we're, at least for the next 12 months, there's going to be some great opportunities. But we saw it was bizarre, just really saw a slowdown in the rental market, the long-term rental market. And it got to the point it was just very hard, almost regardless of how much money you put down. It was hard to cash flow, and it was hard to make sense. And we saw rental prices decrease a little bit. We saw the demand for rentals drop considerably over the last 6 to 9 months. But we're starting to see that shift again, and you're now got your eye on kind of, hey, maybe we should start having discussions again about buy and holds.
Right. And so historically, we've always gone through like a 7 to 10 year sine curve. So you're going to see, a peak every 7 to 10 years, and then you're going to see a valley in every 7 to 10 years. And so when I hear these people, or when I see this media that comes out about the market crashing and this and that, and I'm like, well, crashing for who? Because if you ask me, in 2021, the market crashed for buyers. They were paying 50, 100 grand above appraisal value, waiving inspections and doing all this. So it sucked to be a buyer then. It was fantastic to be a seller, right? So on the flip side, and that's that's at a peak. Down in the valley, it's awesome to be a buyer. Sucks to be a seller. So doesn't matter. There's always going to be a time to transact, whether you're the seller or the buyer. It's just all about timing. So it's not about a market crashing. It's just, who's it going to be more beneficial to right now? Is it going to be more beneficial to a buyer or to a seller? So for me, like I've been saying for better part of a couple of years, I don't want to be a seller necessarily. I want to be a buyer because I know that I have upticks in front of me. History has taught us that. Something's going to happen in the market, whether it's a $200 billion injection of funds into mortgage-backed securities, or if there's another COVID. You never quite know what's going to happen. It's just that we know that there's going to be some government involvement, and then there's going to be civilian involvement. People are going to say, "Hey, look, I can't transact because I can't afford to." So then sellers have to lower their prices, and then there's always going to be some type of trigger or multiple triggers that's going to happen. We don't know what that's going to be, but we know that we've been sitting in a trough for quite a while now, and our math and our data says that we have an uptick, probably not this year, but more than likely next year, 2027, where we're going to start seeing inclines in value and inclines in volume. So for me, when I'm in that type of environment, I see opportunity for long-term holds, and we're also seeing a lot of people that are asleep at the wheel when it comes time to flips. We had these massive iBuyers there at the top of the market, Open Door and OfferPad and all those guys. And Zillow. They were dumping money into getting their hands on distressed properties. They've tightened up a lot of their funds, and so if you're a flipper, either a smaller one or even a bigger one, I would say open up your doors now before some of these big guys go over there and open up their doors, and they're going to be eating up a lot of that market share. Like you had just referenced, we've, in the trenches, had these rentals that have been kind of just sitting, and they were sitting for months, and we were lowering prices, and we were ramping up marketing, doing all the right things in a typical market, and still just not renting. First of the year hit, all of a sudden, it seemed like a light switch went on.
It's crazy.
And every single one of our rentals had multiple applications on them, and I'm not talking about, I'm not ranking it, not like Section 8 ones. Like we're talking like we have some tenants that were applying. They have 700 plus credit scores. They have great income. They have great assets. They have great history, awesome background reports. After we're doing all of our vetting, we're over here like, why aren't these guys buying? But okay, I mean, they'd rather rent right now. So, I mean, they love the house, and so let's do it, right? So, gun to head, I don't know what switched. I don't know what happened.
Yeah.
Neither do I.
All I do know is that our inventory has been gobbled up on the rental market, And so what that tells me is that we have about another 6 to 10 months before we start seeing rental rates increase again. So that's why I'm over here sitting in a position that, you know what, I'm gonna start dabbling with it. Case in point, my daughter is 19. She just went under contract with her first investment property. She's going to be using it as a rental, but she's also going to live in it while during the school year and rent it out to to other roommates, or there's a platform called Furnished Finder because she's in the BSN program. I thought it'd be a great idea to have her be around other nurses or other people in the medical field, whether it be for opportunity or for education or whatever. There's a lot of these traveling nurses that love to come here, and where her townhouse is 5 miles away from 3 different major hospitals.
Maybe she can get them to do her homework. That'd be great.
Right? Yeah, yeah. Right. So that's
where my brain goes.
Yeah, I know. Like, I mean, she does well on her own. I don't think that she needs that. She's just, she's been around her old man and us for years now, and she's like, well, why would I go over here and spend $1,500 a month on a dorm when I can buy a house? And I mean, she's not going to be able to rent out the other rooms to fully cover mortgage and utilities, but most of it. And so ultimately, she's going to be paying a hell of a lot less than $1,500 a month to live there, and she's going to be building equity. She's going to be having her mortgage paid down. She's going to have the tax advantages, all the pillars of how we grow and make money in real estate that we've talked about for years now. She's doing as a teenager, and I'm fucking pumped for her.
Not to mention, though, that you stole the property, too. So, I mean, again, just the opportunities out there. Rates are lower, one, because of the mortgage-backed security situation. But you also got it way undervalued. So, really cool.
Boy, I hope the seller doesn't watch this. I mean, okay, so they know that I bought it as an investor. They know that I had to build in profits on it. It does need work. They were in a position that I don't feel like it was a win-lose situation. I feel like they needed it. They gave me numbers too, and I said I'm willing to do that.
Yeah.
And so it wasn't like I'm out here, like, I'm not doing anything unethical.
No.
These are numbers that they threw out at me, and I said, yeah, I'll do that. And
he wanted to unload the property, and
Right.
you're
Those are
taking
his-
advantage of an investment, and you did but you're out there, you guys are out there in the market all the time talking to people, and you hear something like that, of course you're going to do it. Mm-hmm. Of course. It's a great property.
Yeah.
Well, and that kind of just leads into, whether you're an investor right now, or you're just looking for a home to live in. It's really interesting because we're taking a look, and we've talked about rentals being gobbled up, but over the last couple of weeks we saw an uptick in inventory in the Phoenix market area. We saw days on market tick up. I think for the average home between $300,000 and $500,000, average days on market is 90 days. Mm-hmm. But what was really interesting to me is we saw the absorption rate jump up, and what the absorption rate is, it means if no other homes hit the market, how long would it take for the existing inventory to be gobbled up? And that now, at least last week, was above 6%, which means we have been saying all year long, listen, we're in a buyer's market. The numbers are now real. I mean, and you could have argued with us last year saying, balanced market or whatever the case is. I'm telling you, boots on the ground and what we're seeing and what we're negotiating, it was a buyer's market. The numbers are now behind that. And I don't know how much longer it's going to be like that, but Justin, we are in, numerically now, by the numbers, we are in a buyer's market.
Which is really cool for me. Obviously I don't have anything involvement with sellers typically unless they're looking to buy another property. So I need the buyers out there, and we've seen a lack of buyers for a long time. And so they're calling for you guys. They're saying the numbers, the statistics are showing it's a buyer's market. Negotiations are ready for you. Check it out. Play the market. It's worth a peek.
And then to your point, Ryan, the deal, and I'm just going to talk good about us right now.
All right.
And why our listeners should text the word long to 623 AZ Recon. There's a difference between hiring a real estate wealth manager like us, people who we buy homes, we invest in homes, we flip homes, we are doing it, as opposed to just buying any old license, or using just any old licensed real estate agent. The reason that you got that deal for your daughter, and the reason that we've had such success in 2025 in negotiating, is because we're not afraid to pick up the phone. We do our research. We know their equity position. We know we're in a buyer's market. We're taking a look days on market and willing to have tough conversations and equip the other agent with the information to go back to their seller to present, rather than just, hey, here's our offer.
We're 100% transparent about everything, and I think you probably seen on television these other people that are going to buy your home cash and this and that, no fees, etc. And then they get in there, and then they've mentally sold their home, and then boom, they go and they say, oh well, actually there is a $20,000 adjustment we're going to throw at you, or else we're not going to close. And they're like, well, I've already packed all my stuff and moved out, and now I'm in a position that I have to close on this thing, even though I'm going to get $20,000 less. And for us, it's always been no, hey, look, here's exactly what the numbers are. Here's the profits that we've built into it, because I'm not willing to do it for free, and this is what my time is going to cost on this thing. And they appreciate that. And at that point, they have a decision to make. Like, okay, you know what? I would rather put it on the open market and go through the song and dance, or put money into it, or whatever. But sometimes people they just want out of the situation, for whatever their motivation is. And at that point, they can say, okay, this is how motivated I am. All right, I'll accept that deal. And that's where that's why people trust us, is because we are doing exactly what we say that we're going to do, and fully transparent about it. Like this situation on the townhouse, there was nothing.
There's nothing to hide.
Yeah,
You laid it all out.
Right, and they're tickled, and they're ready to move forward. So we get a lot of deals that way, and like you said, we're out there pounding the pavement. We're letting it be known, and our reputation speaks for itself. And so, like this one for my daughter, this is not the first time we've done business. Excuse me. The person that connected us, I've done 3 other transactions with in my career, and they know that if I walk in there and I say this is what's going to happen, they can take it to the bank. And while it may not be the best situation, they didn't sell because they wanted to. They sold because they had to. And so somebody was going to do it, and so it may as well be me.
All right, well, there you go. If you want to learn more about our strategies, and really, regardless of whether you're an investor, first-time home buyer, whatever the case is, if you are not only looking to take advantage of being in a buyer's market, but really learning how to leverage that and negotiate and put yourself in the best negotiating position possible, we want you to reach out to us. All you have to do is text the word LONG to 623-AZ-RECON. That's LONG to 623-AZ-RECON.